has been few major positives for India as we speak. JP Morgan's Emerging Markets Bond Index has finally included Indian bonds, and that definitely is a great news for India in the medium to long term. Short term, there will be probably a lot of pluses and minuses due to the fact that global markets are subdued and there is a bit of a risk aversion. But undoubtedly, the inclusion of Indian bonds in the JPM Emerging Markets Bond Index is a good news from India perspective. A significant amount of debt or passive money will flow into India, and that should provide stability in the current account deficit matter. Also, the currency will get a boost when a lot of dollar flows into the country, and the relative depreciation of Indian currency vis-a-vis US dollar will definitely get arrested to an extent. Having said that, I think we have to be cognizant in the equity market of what's happening in the global risk front. And in the past few days, we have been witnessing post the US Fed chair's press conference, post the policy, there has been a bit of a risk aversion, and markets globally are a bit subdued. India also is taking cues from there, and I think acting in a sober and somber manner. Also, India has a different challenge, which is the oil prices moving up continuously, and they are now crossed $95 per barrel of Brent. Now, this definitely doesn't augur well for Indian economy and Indian capital markets, and we have to be cognizant of this challenge in the near future. But having said that, there are other positives for Indian capital markets and Indian economy. The biggest one being the monsoon, which there were a lot of concerns of El Nino deficit in rainfall. But now with the September rainfalls, it's likely that there will not be any deficit and rainfall will be plentiful. With that, the concern around Rabi crop and the inflation to an extent gets mitigated. We expect that inflation will come under control in spite of oil prices being at elevated levels. The reason for that may be that the increase in oil prices in the global markets may not be passed on to the consumers at this stage, considering that there are many state elections and central election in the near future. Overall, we have been maintaining our positive bias in the Indian market. One sector which continues to stand out in terms of valuation and attractiveness is the BFSI. And we believe that we will continue to see more inflows as well as more excitement in this space. We like counters like SBI, Bank of Baroda, even at current levels for long-term investors' portfolio. We also like some of the other names in diversified amongst diversified conglomerates like Bharat Forge, Larsen & Toubro, and Reliance Industries post the recent corrections. Investors will do good to keep picking up these stocks and build long-term portfolio. Thank you.